debt to GDP is rising because of the distribution of wealth gap. So I wrote about this, and this is a big step on my journey from a top-down basis of understanding why Bitcoin's been growing, but more importantly, why debt to GDP has been growing. Bitcoin came out before debt to GDP really started to accelerate exponentially. It's been lined up with technology. The more you disrupt workers, the more the government has to subsidize and has to come in with more money to help those people. And it comes at a time when we're already going to see debt to GDP getting higher just because of the health of the country. Do I think 5 years from now that AI will start to impact that? Yes. But I think the next 5 years is a little bit more of a dystopia. It's a painful point.
What's going on, guys? Today, we've got a great episode with Jordi Visser. Jordi is a 30-year veteran of Wall Street, and we talk about all of the things that happened this week. We get into why the Fed didn't cut interest rates, how to think about inflation, what's going on with Israel and Iran, how to think about Bitcoin in a brand new presentation that just came out from a big-time Wall Street investor, and why they think Bitcoin's going to be bigger, but we disagree. We think it might be bigger than they think. And on top of that, we also get into artificial intelligence, what's going on with Perplexity, and much, much more. Here's my latest conversation with Jordi Visser. All right, Jordi, we got a lot to talk about today. I thought the first place we could start is Coatue recently had their annual event. They put out this great presentation. It's one of the highest quality things that I see every single year. And they specifically talk about Bitcoin in here. And I think you've got some different thoughts maybe than they have in terms of what Bitcoin is worth and how they're thinking about it. Give us an overview of how is Coatue thinking about Bitcoin? And then what are the areas where you agree or disagree with them?
Yeah, first of all, the report was great. I mean, it's so Mary Meeker put out a very long form report 3 weeks ago. I didn't find that nearly as interesting. It was just a bunch of data. Some of it was old. The Coatue stuff got into a real kind of futuristic look of what the market and public companies will look like. And it focused on the disruption from AI, the benefits that will come from AI from the macro perspective, especially debt to GDP, which we can go in. But the most interesting thing right off the bat was the Bitcoin part. To find Coatue, I don't want to say embracing Bitcoin, but if you listen to the BG2 podcast, the brothers were interviewed on there. And Philippe spent a lot of time at the very beginning of the podcast talking about Bitcoin. Now, in there, they kind of list what they think the market caps will be due to AI and just kind of their views of the future by 2030. And they had Bitcoin, I believe, as the third biggest company, with Microsoft number one and I think NVIDIA number two. Now, the interesting part was the CAGR that's implied by the Bitcoin market cap, which they had at about 5 trillion, is less than 20% over the next 5 years. Now, they didn't highlight how much of a deceleration this is, considering the 3-year Bitcoin CAGR right now is about 75%. The 5-year is about 65%, and the 10-year is about 85%. So somewhere within there, you're doing 65 to 85 on 3, 5, and 10-year. I've talked on here, and I believe that the difference between what they have is the explosive numbers they talk about in AI. And for those who have watched us now for the last 5 months, 4 months, 3 months, whatever it's been, we've covered a lot of the pieces in there that they brought up. We covered the Satya Nadella talking about 100 trillion tokens. They bring that up. We've talked about power. They talk about the energy side being basically the same. What's the difference between a semiconductor and a nuclear part of AI? These are both necessary before you actually get to the AI. The difference is, and where my views are very different from where they go, is on the belief of what AI is going to do. They don't talk about tokenization. They don't talk about the growth of the private market side. And most importantly, everything that they talk about with AI ends up being a revenue per employee thing, which is obviously a reduction of the labor share of profits for big companies. And this is where I think the end result is the inequality and the distribution of wealth. And more importantly, the worker revolt is one of the things that they didn't really get into this in too much detail. So I happen to agree with the fact that Bitcoin will continue to ascend. I think it'll be the biggest of what they had on the list there and only behind gold by the end of this year. But in their world, they're really talking about a major disruption. And one other thing that's interesting is they don't have Apple in the top 40 companies, which is a really interesting thing 5 years from now.
Well, I think when they're looking out at this, it's really hard to imagine that Bitcoin can keep the compound annual growth rate that it has had, right? You mentioned 65 to 85%, but one aspect that maybe is in reverse. Usually it is the big organizations that are adopting an asset, and then you get the smaller folks coming in later. We are seeing this like acceleration because now you have the biggest pools of capital coming into this, and you can see Bitcoin entering the public market. You can see Bitcoin obviously going into the sovereign wealth funds. And so there is a world where that compound annual growth rate is much stickier than maybe people otherwise would think. Now, I don't think it's going to stay at 65%. I also don't think it's going to be below 20% for the next 5 years. And so if they continue to extrapolate that out, compounding works wonders. It's the eighth wonder of the world. You don't have to change that percentage that much. If you go from sub 20 to, let's say, 35 or 40%, and you extend it from 5 years to 10 years, you get a very, very different number at the end of that time frame than you would otherwise if you just keep it at a lower rate for a shorter period of time. And so to me, I think that when I see these guys talking about this stuff, they're so used to thinking about stocks. And the bigger something gets, the more that compound annual growth rate comes down. But Bitcoin does feel like the one asset in the world that is bucking a lot of these trends. And it's very hard for folks to kind of wrap their head around how big it can get and how long this can last for.
Yeah, and I completely disagree with the argument that as this gets bigger, it's going to take more to move it and the CAGR should come down. I actually think the CAGR is going to accelerate, and I'll give you the reason why. So the Mag 7, I mean, their numbers have been staggering. They already broke the law of diminishing returns as you get bigger. And the reason is, again, because of technology and exponential innovation. Exponential innovation leads to concentration of wealth in smaller places. We've already seen that. The problem is Bitcoin has not outperformed the Mag 7 over the last 8 years. It's been competing with it. I think what is going to happen is as we end up in a point where the public markets start to underperform the private markets that never go public, which is what is beginning to happen, more and more people will equate the Bitcoin market cap as the disruption to the public markets. It's a new capital structure. Bitcoin is the base layer of the new capital structure. So I believe network effects are going to accelerate this year because of stablecoins. They mentioned that. Okay, great. So you're going to have more activity happening in the digital economy. Digital money is going to transact, and it's all based on disrupting the incumbents to lower cost and be a decentralized force. The entrepreneurs, the people getting fired are going to move into, they still have to make money. They're going to have to make money one of two ways. Either they're going to have to invest, and they're not going to invest in the public markets. They're going to invest in what's working. And we keep driving more and more people that are angry, just like you did with unions after the Industrial Revolution, more towards Bitcoin. So I see Bitcoin as, again, being this place that is actually the direct result of AI accelerating, just like we saw the cloud, just like we saw mobile, disrupting more and more employees and the labor share continuing to be under pressure. So I think this is actually going to drive more people into it at a time where, like you said, and I wrote a paper on this in my Substack, so far Bitcoin's accumulated to the market cap it is, driven mainly by a bottoms-up movement. It has not been a top-down movement, meaning the wealthiest people of the fiat system have no reason to invest in it, so they haven't moved. What Code 2 signals to me is they're looking at it, they still don't understand how it fits. I'm reaching out to them now and saying this is a disruption of public businesses, and Bitcoin represents this other digital economy world, and that's why I always say that is the S&P 500 of the future, not the public markets.
Yeah, well, I mean, you just use Bitcoin. It's the hurdle rate, right?
Yeah.
If you can't beat it, you got to buy it. And I think that people are now starting to recognize there is this highly sensitive asset to global money supply and to debasement. And if that is really your true hurdle rate, is you have to at least be outperforming that debasement rate. Using inflation as the measurement obviously doesn't make a lot of sense. And so I think that you're going to continue to see people who want to find kind of a new benchmark, and Bitcoin seems to be that thing.
Yeah. One thing they said that I want to make sure we hit on, and I don't think you've seen the entire thing, or maybe you didn't spend as much time on it. They did get into this aspect that AI could solve the debt to GDP problem. And there's a nuance in here, which again, I don't agree with. They didn't answer why debt to GDP has been rising, and you just hit on it. And for everyone watching, debt to GDP is rising because of the distribution of wealth gap. So I wrote about this, and this is a big step on my journey from a top-down basis of understanding why Bitcoin's been growing, but more importantly, why debt to GDP has been growing. Bitcoin came out before debt to GDP really started to accelerate exponentially. It's been lined up with technology. The more you disrupt workers, the more the government has to subsidize and has to come in with more money to help those people. And it comes at a time when we're already going to see debt to GDP getting higher just because of the health of the country. Do I think 5 years from now that AI will start to impact that? Yes. But I think the next 5 years is a little bit more of a dystopia. It's a painful point where AI accelerates so fast and companies are out there trying to get rid of employees to keep their profit margins higher, and small businesses are having trouble compete. I actually don't think the next 5 years is reducing the pressure on debt to GDP. I think it's actually increasing it.
One of the other aspects I think that has surprised people is everyone was predicting the recessions, the depressions, and the Black Fridays. Now it looks like Q2 is going to be a bonanza, 3-4% GDP print. I think that some of that, as you've previously mentioned, is a recovery from Q1. But also it does feel like now that we're getting some of this economic data, people are starting to think very differently about the economy and what the rest of this year looks like. The Fed, they seem to not be very worried. They're not cutting rates. They are kind of steady Eddie. Obviously, the administration is yelling and screaming at Jerome Powell almost on a daily basis now, saying that he should be fired or he's behind the curve, et cetera. How do you look at the economic data, the GDP print, kind of this jobs softness that we're starting to see, and then what that means for the Fed and their decision not to cut rates this week?
Yeah, so we've talked about this before, but just to make the economy much simpler to kind of think about, let's just take the AI investment side, which is massive. Let's take the profit margin side, which means earnings grow. And let's go to wealthy people. That means they keep spending. It's really hard to have a recession with that going on. It's not about, unless we're having severe job losses and the stock market is down, if profit margins are growing and nominal GDP is staying near 5%, which is what's happening, all of this stuff about recession is just ridiculous. It's not possible. Do I think the economy is growing rapidly? No. What I think is happening is the AI portion of the economy is fueling the entire movement right now. So whatever percent of nominal GDP, I think AI is responsible for 75, 80, 90% of it. Between the CapEx from the hyperscalers, between, again, the profit margins for the S&P 500, which is at the expense of workers. It's at the expense of wages. It's at the expense of all of this stuff. What it leaves the median person in the country is in this point where we still have the inflation sitting at the levels that we did back from COVID. They haven't come down. Food prices haven't come down. Nothing has really come down at this point in any meaningful way. And now with oil, you're going to see pressure, gas at the pump, and you're going to see oil unless it comes down quickly. And we have an end to the war very, very quickly because we've taken oil prices up, diesel prices are going up, and gas at the pump probably has another 20 to 30 cents to go. It's already up 10 cents or 3% from where it was. So I think the median voter in the country is still suffering, I don't want to say a recession, but let's just say an environment where they can work, but they don't feel like they'll necessarily have the same job in a year. And I think that's the best way I can kind of frame this is everyone's worried about AI. I get asked questions all the time through email, through chats, through Twitter DMs about people that are like, hey, can you do something to show me how my kids can survive this? I think people are more worried, and that just means soft consumer spending at the bottom 50%. But because we're a top heavy, portion of the economy, as long as the S&P 500 is going up 7% a year, I'm not even saying 20, I'm saying 7, you just can't have a recession. So it might feel like a recession to the bottom 50%, but it doesn't to the top 50.
And when you see that, I remember there was a interview that Scott Bessent, Treasury Secretary, did. I think it was with Chamath and David Friedberg early on. And he was asked whether he believed the economic data. He said no, and then very quickly kind of polished his answer. But they were talking about this idea that all the polls, all the data said one thing. But then when you went and talked to people, they told you a different story. They felt something that was different. And there's always the example that like maybe people, that they kind of don't believe the data because they're biased or they've got some sort of, anecdotal experience that actually isn't true. But his point was, we can sit here and try to measure all this stuff as much as we want. But if people are telling us, I can't afford to buy a home, I can't afford food, I can't afford gas, I can't afford all this stuff. And we're sitting there saying like, what do you mean? Americans are better off today than they've ever been. He's like, there is a point in time where you have to go actually listen to the people and understand why is it that half the country is saying one thing, but the data is telling us another thing. And it feels like that's what you're highlighting here, is that both things can be true at the same time. The aggregate data can tell us one thing, but then there can be a very large portion of the population that has a completely different experience and is actually being hidden inside of that data in a way that maybe we don't have the sympathy or the empathy to really understand.
Today's episode is sponsored by Figure, the largest non-bank home equity lender in the United States with over $15 billion unlocked on their lending platform. They are now in the crypto-backed loan space, and they offer industry-low interest rates when you use your Bitcoin as collateral to get cash. You can access interest rates starting at 9.9%, the lowest fixed rate in the industry at 50% LTVs. Whether you're funding a major purchase like a down payment on a home, investing in new opportunities, or even buying more Bitcoin, Figure makes it straightforward and transparent. You can go to figure.com/pomp or click on my link below to take a Bitcoin-backed loan with Figure today. I'm an investor in the company, and I have spent a lot of time trying to understand this product. And so go visit figure.com/pomp to better understand exactly what they're doing and how these rates work. You can go to figure.com/pomp today. Today's episode is brought to you by my partner Bitwise, the global crypto asset manager. Bitwise has $10 billion in client assets, a team of 100 plus people, and more than 30 crypto products. One more thing, they've also got one of the best weekly newsletters in crypto. I say that as someone who's no stranger to newsletters. Take it from me. Bitwise's weekly CIO memo is dynamite. The weekly CIO memo is written by Matt Hogan, one of the best minds in the business. Matt has a knack for seeing the crypto stories that people are missing or digging a level deeper on things like the strategic reserve, corporate Bitcoin buying, or crypto price predictions. I highly recommend it. Matt's got some really smart and bold takes and a lot of wit. And the memo takes just 5 minutes to read each week. So head over to bitwiseinvestments.com/CIO memo. That's bitwiseinvestments.com/CIO memo and check it out for yourself. The Bitwise Weekly CIO Memo. Hot takes on crypto's biggest stories. And always, of course, carefully consider the extreme risks associated with crypto.
Both things can be true at the same time. The aggregate data can tell us one thing, but then there can be a very large portion of the population that has a completely different experience and is actually being hidden inside of that data in a way that maybe we don't have the sympathy or the empathy to really understand.
Yeah. And again, I think this should be obvious to people. Let's go back to what we said about the rate of return that has happened for the Mag 7 relative to all other parts of the global market, the global equity market, but also with inside the S&P 500. Does it feel like a bull market to Ford and GM? And just go through the amount of companies in the S&P 500 that are suffering. At the same time, the Mag 7 have gone up exponentially. Their market caps have risen just insanely since 2009. So what you're dealing with is, if you take the S&P 500, and we hear all the time, well, there's very few stocks going up. It's very concentrated. This is acting like a bear market. This is the way bear markets start. Use the same analogy for inflation. Use the same analogy for any part of GDP that you want. You can actually have the S&P 500 going up, but with not many companies participating. You can have inflation going up slightly, and you could have some things that are really, really high, like house prices, as you brought up. Housing affordability has been at horrible levels and it remains at horrible levels. But you're starting to see, because there's not a lot of people that can benefit or that can actually afford a home, you're starting to see house prices come down. And there's a lot of people forecasting they'll be down this year. I don't know if we've ever had house prices down in a year and not had a recession. It's very difficult to have house prices down, but somehow or another, because the median voter cannot, and I keep saying median voter because I want people to realize the middle person in the country is feeling the pain, and the stock market is still going higher. So when you go through the S&P 500, the middle company in the S&P 500 is feeling the pain of higher rates, the pain of losing to the Mag 7, and the pain of not being able to embrace AI. The whole country's going through this. And that's why it's kind of like a recession in the way some people look. And if you say you can't trust the data, the reason they can't trust it is because what they think should be happening is not showing up in the data. And I think a lot of that is garbage in, garbage out, using historical models to model what isn't relevant anymore with AI.
One of the aspects that we are getting clarity on is legislation. The Genius Act passed the Senate. This would give us a federal framework for stable coins. It feels like everyone is jumping headfirst into the stablecoin game. A couple of headlines over the last week or two. Amazon and Walmart, they are looking at potentially creating their own stablecoin. You have a 20-year veteran of Citigroup. He left. Founders Fund backed him with about $10 million. You also have the Tether, $13.7 billion in profit last year. The Circle IPO, they're up 300, 400% on that. You saw JP Morgan come out with the JPMD, I think they're calling it, or the JMPD, which is essentially like a commercial banknote that they're tokenizing. And the list goes on and on. I mean, there's tons of these things. I think Stripe announced that they are partnering much more deeply with Shopify in 34 different countries. Coinbase announced Coinbase payments. It's just like, we can talk about this for hours. Why is this happening? Is this just the technology is so good it's a black hole and all companies, all talent eventually ends up with the stable coins? Or is there some other way to read the progress that's being made in this part of the market?
Well, first of all, I think the most powerful thing to take out of this is people have to remember we're only 2.5 years out of a mega bear market in crypto. Meaning you're talking about just 22 was an environment, and you know this better than I do, where destruction was across the board. We're still getting through a lot of the lawsuits and bankruptcy cases. For this to be happening at this pace now, and I can remember the first time we did a show together, and even before we did, I think in January I talked about this. The number one thing for this year was stablecoins. And no one really knew how to make money off stablecoins. Well, now all of a sudden you're starting to see, oh my gosh. So you can make it through Circle. Coinbase was up 16% on I believe Wednesday. Anyone that even says stablecoin at this point, everyone's kind of jumping through it. People have texted me saying, shouldn't Circle be $1 trillion market cap? I mean, everyone is now getting completely on board. Here's my take. Simplistically, stablecoins are the bridge. They are the bridge between the traditional finance world, which means transactions, everything that goes into GDP. Digital money is not Bitcoin, but Bitcoin is about wallets. Bitcoin is about the thing that enabled this bridge to be built. And the more people that are getting involved in it, the more people that are going to allow, and when I say people, the more that companies are going to allow individuals to transact, that money is going to end up in the digital economy. It's going to be digitally native. And that's why for me, this is exactly the network effects that I expected to happen. Part of this is individuals, but part of this is going to be set up through AI agents. The same way that I never really had to deal with my wallet and my iPhone to just start tapping things. It just kind of happened. Well, the fact that already happened, and I'm not kidding. I never, it's not like I sat down one day and said, you know what, I'm going to go, I really got to investigate this wallet thing. No, I just connected a credit card to it and I started tapping, and I realized that in most dinners now, paying. There was a true story that yesterday on the holiday we had here, I went out to a really nice dinner and I looked around. I'm like, oh, I didn't bring my wallet. And I said, I use my phone for everything. I literally stopped carrying my wallet and I didn't bring my backpack that I normally bring. So I think that's what's happening is stable coins are just kind of that ability for everyone to jump on board, realize that if they want to get the consumers to use it, they need to have it. And so everyone from a bank, I mean, when Walmart, when Amazon, when Shopify, when those three companies in a single week are openly talking about it, when Uber is talking about it, I mean, I can't think of anything more powerful in terms of the movement we're having and what it means to, again, the public market companies, because they're the ones that are going to suffer from this.
I interviewed this week Paulo Ardinho, who is the Tether CEO. And one of the things that was really interesting is we talked about the Circle IPO. Mm-hmm. And I asked him, I said, based on those multiples, you guys would be pretty valuable. And he had a number of different, frameworks to think about valuation. But he said, look, there's a world where Tether's worth $2 trillion, given the performance of the business and some of the assets they own. And at first you're kind of like, what do you mean? Come on, stop it. Like a $2 trillion company. And then you start thinking about it. You're like, he's probably not far off. And I think that's just one company in this space. You add in the circles, all these big banks. And so it does feel like it's going to come down to the challengers versus the incumbents, and the banks are not going to just like roll over and give up this market. And so they feel like here they come. JP Morgan obviously announcing this like a commercial banknote is maybe one step, but I got to imagine that you are going to see many of these banks figure out, do they build something? Do they buy something? Do they partner together with other banks? Like, how do they use the advantages that they have to box these challengers out? And it's going to be fascinating because maybe just the market has already spoken. You know, the taxi kind of conglomerate tried real hard to keep Uber out. Just people wanted Uber, right? And that might be what happens here, is that people just want non-bank stable coins, both internationally and domestically.
All right. So I'm not going to comment on what you just said because I completely agree. And I think we've hammered this point home that the merging of, if you haven't spent time on stablecoins, which I know a lot of people that are in the more traditional finance still have not spent time. I literally have a vision of just a bridge between these two worlds, and the bridge is being built as we see. One of the things that I haven't done this on this show. I want to ask you a question. So how do you think about if stablecoins are going to explode and we're going to be doing 5 times the amount of volume by the end of this year that we're already doing right now because of this? What about Ethereum? What about a Solana? What about all the guardrails that are supposed to be benefiting from the volume expansion? They're critical in my views of what will happen to Bitcoin before the end of the year. I think that is the next phase of this. This has been my view, is that as stablecoins explode, we should start seeing the energy behind this with Ethereum and Solana and Sui and all the other components. How are you thinking about this?
I don't know if the stablecoin thing plays as much into this thesis as maybe as in general. The second that everyone thinks like altcoin season is not coming, it will show up, right?
Yep.
And Bitcoin has done such a great job of sucking the air out of the room, and rightfully so. It's the king. It will always be the king. I think that it has really ascended to an asset that now is accepted on Wall Street. But I do think that you're going to see people push out onto that risk curve in the second half of this year. And as we get further in the year, it means that like alt season is more compressed. And so what you're going to likely get is you're going to get this very like reflexive move up, and then you're going to get a very violent move down over time. And, you know, it goes back to the people who I tend to see playing in that space. They're more traders or short-term optimized, kind of strategies. The folks that are just, hey, I'm holding something for 30 years, they're holding Bitcoin. And so there's many ways up the mountain of success, right? There will be people who make money in both of those kind of worlds. But I agree with you that there is, it's not a very long tail. It's not like there's 100 assets. Maybe there's 5 or 6 that will benefit from stable coins. They will benefit from people wanting to push out on the risk curve, as Bitcoin is run. And then also you're starting to see it now in the public market with the Bitcoin treasury companies. Now you're starting to see the Ethereum treasury company, the Solana treasury company, Tron is going public, right? I mean, like they're all going to do this. And it's the classic, well, like if it worked for Bitcoin, why can't it work for Fartcoin? And I promise you, somebody is going to create a meme coin. There's a guy in Canada that is, he's the chairman of Soul Strategies, this guy, Tony G. And Tony, who, I'm his friend. We work together on the Soul Strategy stuff. But Tony had another company and he recently turned it into a hyperliquid treasury strategy. And so naturally, all the people who are interested in hyperliquid, here they come, right? And so I do think that you're going to see that kind of like eat the tail of crypto. And so whether it's the public companies or a private, like these things are going to get a bid, even if you don't think that they're sustainable. What do you think? You agree with that or no?
Yeah, I agree with it. And I think the important message, and I'll say this more from so we have the merging of the traditional finance world and the crypto world coming together in a very powerful way. This is not the crypto tokens and speculation going higher, driving in the traditional finance world. This one is actually happening very differently. So you mentioned just kind of how this alt season, we were kind of in it after Trump took over, and then it collapsed. The reason I'm so interested in it is because we're seeing it right now with Circle. There's no doubt in my mind that Circle is kind of this energy that's going that is crypto related, but it's in the traditional finance world. There are people that have made money on it. Now they're doing the research. They're thinking about it. The Code 2 report just came out. I think the more that people spend time on it, they may go back to some of these all-in podcasts where, hey, didn't Chamath say that this would be the year of stablecoins? Didn't Pomp and Jordi talk about the fact that this would be stablecoins and the network effects are starting? I actually think that Ethereum having an ETF is like a very big positive in this whole thing. I think the traditional finance world is going to help fuel this, along with the people with inside the token world that are waiting for something and a breath to happen. On my video last week, I highlighted that almost every single token is down between 20 and 50% this year. So when you're down 20 and 50% year to date, and that's only year to date, that means you're down even more from when Trump was elected. I think the next phase, when Ethereum, I'm going to say it, closes 2 weeks above 2,700, because that's the level I've been looking at. Once we close 2 weeks above there, I think it'll be the kickoff for the alt season. So
you think that we need Ethereum to close above 2,700 for 2 weeks, and that will kick off the alt season? I
think it broke above last week, and then it came back down. But I think the enthusiasm behind Circle, and again, my kind of world on this is that AI agents are accelerating. Token usage is accelerating. It's not just Satya Nadella that said it. Sundar Pichai said it recently. Like, we're getting explosion. AI agents are coming. AI agents are critical to the explosion of stablecoins. So stablecoins growth right now is not happening from AI agents. It may be starting that way, but I think the convergence between stablecoin usage and volumes exploding in a manner that everyone has to start doing a valuation calculation on it, I think it feeds back in. That's why I asked you about Ethereum and Solana, because there is a relationship between the volumes happening and Ethereum and Solana and SWI and Tron and all these other pieces. So if you get that energy component associated with it and people start drilling down, they do have access to it through the ETFs. And like you said, it's starting in the treasury side. So I think this is a broadening out move. So yeah, 2 weeks above 2,700, and I think it's the kickoff.
Let's talk about AI. You and I, we woke up earlier this week, and Irvin from Perplexity, the founder and CEO, he had posted a clip of us talking about Perplexity and AI, et cetera, which was fun and cool. I think you and I both have gotten to know him and the team over there. What is your takeaway from Perplexity in particular? It seems like they have really used these AI models to significantly change the way that people are able to get information. I mentioned to you earlier that Howard Marks, the famed investor and memo writer, now every time I talked about a successful investor, I'm going to reference whether they're a podcaster, an influencer, or a memo writer, because that seems to be the thing for the young guys. And so Howard Marks used Perplexity to write part of his memo. And he explained that he was using it, but it was pretty damn good compared to his normal writing style. And so how do you see this all playing out? And what are the areas you're maybe most excited about?
Today's episode is brought to you by Bitcoin IRA. Are you a crypto investor with a retirement account, but don't have any crypto in your retirement account? Listen up, this is for you. Bitcoin IRA is revolutionizing the way Americans save for retirement by helping smart investors diversify their savings with access to over 75 cryptocurrencies. With world-class customer service, military-grade encryption, and a vertically integrated licensed trust company, it's no wonder more than 200,000 Americans trust Bitcoin IRA to secure their financial future. Get started. It is quick and easy. It takes just 3 minutes to open an account. Once you're set up, their team of IRA specialists will reach out to guide you through every step of the process. Whether you're transferring an IRA from a legacy bank, rolling over an old 401k, or starting fresh with a new contribution, the Bitcoin IRA team is here to help you get access to real crypto in your retirement account. And here is the best part. As a Pomp podcast listener, you can earn up to $1,000 in rewards when you add funds to your account before tax day. Search for Bitcoin IRA in the App Store or visit bitcoinira.com/pomp to join 200,000 Americans on their journey to upgrade their retirement. That's bitcoinira.com/pomp to upgrade your retirement today.
I said it last week, and for the Perplexity team, I'll say it again. It has replaced 60% of my Bloomberg usage. I have a lot of thoughts and ideas on how it can replace more of it. The one thing I've used as kind of a comparison side, I remember in 2009 and 2010, and if you remember, if you didn't see it, in this theme, Bloomberg versus Perplexity, I would go watch the BlackBerry movie that came out. I don't know if you saw it. Great movie on kind of a tool that the financial world use, which is the most similar I can say to Bloomberg, meaning everyone liked the keyboard on the BlackBerry. So it was a very, very slow change to the iPhone. Part of it was security, just like Perplexity. Part of it was people not really thinking about needing to use it or all the benefits that came. What I think is going to happen with Perplexity, and I already see it happening, and the team should really spend time with me on this. The community of Perplexity should be building the competition. I already have things built in that I'm showing hedge funds. I believe most of the AI platforms will have some form of a community-based app store for the people who are using it, because I've always said domain expertise plus creativity plus curiosity leads to an app store that is basically it's a brain store. You're getting someone else's brain. The whole way that AI is going to democratize things, in my opinion, is to use other people's brains, the users, not the companies. That is the power of AI, is to find people who use it. Because if I said to you, this is how I use it in Perplexity, it's stuff that I figured out that I rabbit hole in, and I can go get down to the bottom. And I know you've used it in the same way. I can get lost in a conversation with both Perplexity and ChatGPT while walking down the street to talk about the things that we talk about here. When I read the Cotu report, I had about a 30-minute conversation with ChatGPT about what I thought in the report. It had the report. So I was having a conversation on something that was released 2 weeks ago. And I'm having a conversation on my views that are different than that one. And it led to kind of some of the thoughts we shared here today. I do the same thing with Perplexity, maybe less so with the voice mode side, but building tools to look at charts, to set up workspaces, to set up the ability to do it. And so every time I hear a Bloomberg user say, I don't know how you're getting to that level. I can't access where a current CDS is on Perplexity. I can't access when the debt maturity is on this. Great. There's no way at this point that it should be able to replicate everything that you can do in Bloomberg, but Bloomberg cannot do the stuff that Perplexity can. So you have to kind of look at it both ways. I said 60-40. The reason I said 60-40 is because the FactSet data and the company commentary, I can get instantaneous, and then I can be in another company and another company and another company with similar commentary. There's no comparison to me. Perplexity has already beaten Bloomberg on the ability of going lateral with thoughts as opposed to being locked in a silo.
At some point, do you think that whether it's Perplexity or somebody else will eventually just invest money as well? Like we saw the rise of the robo-advisors, but those were really just kind of like indexers to a degree. If you can train the model to answer questions that you then are using to go and make investment decisions, is it that crazy to think the natural extension is that it can learn from those questions you're asking it and eventually be able to allocate the capital itself?
Eventually we will get there. I think the human element is still very important to people. So there is a separation between it ever being full-blown robo-advisor. But I think with younger people, they don't care as much. For older people who still control most of the money of the world, they need that personal kind of hand-holding touch. But if there's a verbal conversation, and that's why I always say if you use voice mode, it changes things. That's why when I wrote the paper that if you want to get started with AI, the first thing to do is to just talk to it. And I say build a relationship, and I think it kind of freaks people out. But the way that you use it is the way that you use it. I mean, if you look at a golf swing and you take 100 people, their golf swings are all completely different. For the golf fans out there, Scotty Scheffler's feet move like nobody I've ever seen move. He's the best golfer in the world. Everyone's golf swing is different. Everyone as a user of AI is completely different. When you get into software and you're pressing buttons and it's doing things for you, there's not as much creativity. I do want to add one more thing, because you've had experience with this. I've had experience with this. When I think of, and I'll just use Perplexity again, but if I connect Perplexity to Cursor, that's where I am in my brain, meaning I want to build the applications and the tools that I want to have in Perplexity or connected to Perplexity. That's what we're getting to, is how do I create the software that I would otherwise use that I'm in their world? Risk management tools, turbulence tools, things that I've always wanted to build that I would have data scientists build for me or pay software vendors for. Now I'm going to be able to create them myself. There's no right answer to those questions. But when you create an app yourself by verbally going through it, and then you connect it back to your workflow, And if that workflow like GitHub or anything where you can then go out there and offer it to other people in a brain form, I really do think with everything we're talking about, it's going to become very, very personalized, and people will be building their own solutions as opposed to depending on solutions.
The last thing I want to talk about today is Israel and Iran. There's been a lot of rockets flying back and forth, ballistic missiles. The Iron Dome was penetrated. There was also some very surgical strikes from Israel and Iran. There has been a fracturing, I think, of the Republican Party's kind of thoughts on whether this should be done, should not be done. There's always going to be high debate and controversy whenever you overlay religion, philosophy, politics, and economics, right? And there's probably other things overlaid there as well, but at least those four things are kind of four core pillars to this whole thing. How does an investor navigate what is happening and seems to be changing on an almost daily basis, including the president of the United States tweeting like, we know where the Ayatollah is and we're not going to kill him yet, but you should be scared, which is, kind of like we could do things, but we're not going to do things, but we want you to know we could do those things, which only kind of muddies the water for an investor.
Yeah. I say it all the time on my videos. I'm sure I said it here last week when we briefly talked about it. You don't make any money extrapolating geopolitics into earnings in the economy. So what could happen there to impact investors here? And why does the market care at all? The market cares because of the price of oil. The market cares for the possibility that World War III could start. So what's the probability of those events? They're both low. I think the oil or the Straits of Hormuz is rising in probability, and that's seen through a couple of ways. But let's just take oil back at $65 and say now it's at $75. Most people say it'll go to 120 if the Straits of Hormuz are shut down. Whether or not that's true or not is irrelevant. But that means there's right now a very small probability still built in. If we've had a $10 rise and they think there could be another $45 rise, let's say it's somewhere between 15 and 20% to go to just make it a simple straight line probability in there. I don't think investors should care. The second thing is if oil did spike, I think very quickly it would come back down because that's what happens with almost every oil spike. Meaning if they did something, I think that forces the US in. I think it forces a lot of other countries to get in there because it changes the dynamic. So for me, I have always viewed geopolitics as a way to take advantage of the opportunity that it presents, because very, very seldom in history does it turn into anything meaningfully bigger or important. It happens to come at a time when the S&P is sitting right near the all-time highs. It happens to come at a time when the blackout period for buybacks is about to kick in. Buybacks have been averaging anywhere from $5 to $7 billion a day of demand because of how big they are. When they go into a blackout period, the market isn't going to have that steady demand. Sentiment has normalized to at least around bullish, bearish, but maybe 50-50. So I still think we're going to stay around here. Maybe we correct for a little bit and then we go higher. But I think for investors, if they watch the news and they see the bombs going off and a hospital gets hit or an energy plant gets hit or there are threats of nukes, I think you're going to make irrational decisions. And I think at the end of the day, you just always focus on the structural things that are happening. AI is happening. Earnings are good. GDP is fine. We need to see oil go up significantly, but there's probably a reaction function that happens, which means if the S&P did fall, I would be looking to put money in that. The only thing I'll add is I will continue to reiterate the Venn diagram. When you try to find two separate investment themes that are connecting, if Israel and Iran lasts for a long time, and this isn't the beginning of something, or the risk of it being there remains, which seems likely, then oil probably has a floor somewhere around 65. If it's going to stay at 65, people forget that energy stocks fell off because when the tariffs were on, we took oil from 65 down to 55. Well, if now we've put in a floor there, the second half of the year, token usage is going to explode. Stablecoin usage is going to explode. Energy is going to be needed. I cannot say this loud enough to people. I just wrote a piece for 22V on Chevron and Exxon, not because they're pure plays on AI or pure plays on power, but they're the two biggest parts of a sector that's only 3.5% of the S&P, while technology is 50. Power is the theme for the second half of the year. And all that the Iran-Israel thing does is put a floor under oil.
I do think that there is a very interesting dynamic of the United States went and took, our strategic petroleum reserve. We significantly depleted that. It seems like we are trying to fill that back up, and the price of oil going up, it's not necessarily helping in terms of our abilities there. But also a huge part of Trump's kind of campaign platform was drill, baby, drill. And so you've got kind of the things happening in the Middle East, which the United States, on one hand, could be benefiting from if we're selling the oil and oil prices are up. But on the other hand, that drilling is not necessarily keeping the price at kind of a sustainable level. And so there's a lot of like interesting dynamics of not only, just the oil price, but then how does this affect individual countries' production? How does that affect importing versus exporting? And if you really, kind of even go back a couple of years now, you also have the Russia-Ukraine crisis. You have, you kind of like start stacking this stuff up. And on one hand, the fact that oil is not, $100+ is maybe surprising. Like you would think that there's been so much disruption, so many geopolitical conflicts that now are impacting oil itself. It's held in there maybe better than I would have expected.
Yeah, I agree. And I think you brought up a point, and just so people know this, like China and Russia are brought into the Iran-Israel thing. So I think everyone gets the Iran-Russia connection. But for China's been supporting their ability to sustain themselves by buying almost all of the exports that Iran has on the oil side. So there are relationships on this that make the geopolitics interesting from the global side. But I think it also makes it that China doesn't want Iran to be in a position where it can't export oil anymore. And if it shuts down the Straits of Hormuz, it ends up being a very, very, let's say, messy situation. It doesn't get a lot of press at the same time, but Taiwan has been saying that they're noticing that China's drills are looking more real at this point around them. So I do think geopolitics is a part of the discussion always, and we're at a more difficult and, let's say, risky time, but the probability of it escalating into something is still very low. If people want to do things at this point, you can still get long energy stocks. You can still get long puts on the S&P, or at least do something if you're really worried, because the stuff has not been built in. So when you say oil hasn't gone up too much, I completely agree. I also think that volatility and stuff hasn't gone up too much. So if there's any kind of escalation, you could see these things pick up.
Is there anything else that you're paying attention to over the next week or two that you think is worth calling out for people in advance?
We haven't talked about it here much, and you might have more to talk about this. I will say for the next week, it's about expirations. So today is quarterly expiration for stocks, but Deribit has a massive expiration going on next week in Bitcoin. Like I said, I think Ethereum is very close to breaking out here. And I think if it coincides with Deribit options expiration, there has clearly been vol selling that has gone on, because we've seen vol compress in Bitcoin below 40. It's at all-time lows in terms of implied volatility. You've got a lot of people that have been selling call options. I'm still living with the short squeeze side. I think Ethereum needs to break out. I also think we need to get through one of these expiries and then be in a situation where there's a catalyst. Well, now you have a catalyst that if there's any kind of negotiation between Iran and the US, Iran and Israel, and we get any pause in that, we're going to get the next move higher. That'll take us to all-time highs, I'm very certain of, in the S&P. But then you're also going to start getting into earnings report for Q2. And I think the AI earnings stuff, again, what we've seen from Broadcom, what we've seen from NVIDIA, what we've seen from all of the companies that have come out, but in particular Oracle, Jabil this week. We have Micron coming out, I believe next week, if not next week, the following week. You're going to have more and more companies that are talking. So I'm looking actually for that, but then I'm going to throw it back at you on one thing. Cynthia Lummis, the senator, said, first thing we need to get done is the Genius Act. Okay, so we're through the Senate on that. We'll go through the House. It was a bipartisan vote. You had 68. I mean, when's the last time we had anything in the Senate that had 68 votes, which means that enough Democrats jumped on board. Elizabeth Warren obviously did not. But what's coming up after? Because we've still had a lot of speculation that they'll do something in Bitcoin. They'll do something in other parts. We got stage one done of her plan. She's talked openly about what will be happening after that. Do you have any insights for anyone on what you see happening after this bill goes through?
Well, they definitely got, the market structure and the stablecoin bills. I recently talked with Patrick McHenry, former chairman of the House Financial Services Committee, and he said that he thinks they should put them together and just make one bill. And it looks like that's a possibility here. I do think that buying more Bitcoin is going to be something that happens in 2025. Let's see, how long that takes. And then the other thing that, frankly, I really see movement on is how banks can participate here. And it used to be that the regulators would go to the banks and say, hey, don't touch this stuff. And the bank said, well, we weren't going to touch it anyways. And, no problem. Whatever you say, salute them and move on. Now the banks are turning around and saying, we're going to do this now. Like, you better get out of our way. And I think that the regulators are kind of on their heels saying, oh, okay, fine. Right. We'll figure out some rules and let you guys do that. So everyone is very focused on what I'll call like the structural stuff and the way that, things that touch them. But I think that the banks are a really interesting area to watch because if all of a sudden they can bring these products to market, they have distribution. They already have the customer base. They already have the accounts. They have the assets. Like there are some significant advantages that they can capture there. And I think that's really an area that maybe is not getting as much attention as it should.
I agree. And the reason I asked the question is I believe the second half of the year is about the crypto space. I think the first half people may have not realized, but we were waiting for this bill for the entire first half of the year. There were people speculating that there'd be Bitcoin purchases. Maybe everything just got delayed to the second half. The Circle IPO gets done. It brings a lot of enthusiasm, but more importantly, between the Circle IPO and the Code 2 report, eyeballs from the traditional finance world are migrating to crypto. And I think people are underestimating the amount of positive news that's going to come out that basically is being released because had to get everyone set up, had to get everyone through. Like we just are getting this whole movement going. And I think when the meme coins and everything were flying through the roof from November until mid-January, I think people might be falling asleep. And that's why I keep saying when Ethereum closes above 2,700 for 2 weeks in a row where it closes above 2,700, I think we're setting up for a whole big second half of the year driven by AI agents, stablecoin, and more positive reception from the traditional finance world.
That would be fantastic. Where can we send people to find you on the internet?
You can find me posting on X. They can find me on YouTube at VisserLabs. They can find me at my Substack. And of course, for the institutional crowd out there, 22V Securities, 22vresearch.com, regular research pieces.
Amazing. Jordi, thank you so much for doing it. And we'll do it again next week.
Thanks, Pomp.